Hey, good morning everyone. It's Marv Eisen from Timeless Dollar, and today is Monday, December 20th, week before Christmas. I don't know about you, but I really love Christmas and the week before Christmas and the week between Christmas and New Year's. For me, it's not really Christmas until I see one special movie, and that's The Christmas Story, when Ralphie Parker finally gets his Red Ryder BB gun. Okay, so I'm going to check that out this week on TV. And whatever you do, I hope you have a great Christmas week as well. Anyway, moving along to what the market is going to do today and where the market is going to go. And by the way, isn't that the key question that every trader wants to know every day? Where is the market going today? I'm going to get to that in a minute. As you know, I always start by looking at the day's economic calendar. And today, Monday, December 20th at 10 a.m., the leading economic indicators come out, and the forecast is 0.9%. The November for the period, the previous was 0.9%. It will probably hold. I don't know whether it's going to be market moving. Moving along to the morning news. Now, typically, as I tell my students, and I'm going to tell you flat out right now, don't put your confidence in the news in terms of telling you where the market is going to go, up or down. Nevertheless, it's important to know what's happening. So first, looking at the flags, everything is red this morning. Everything is in the red. Dow is down 360 points, S&P down 50 points in the overnight trading. Now, what caused that? Well, first of all, there was a continuation from Friday, and there are two particular stories I want to call your attention to. And the first one is right here, where Joe Manchin put the kibosh on Joe Biden's Build Back Better program, and that cuts the forecast, according to Goldman Sachs, for the economy, for the GDP. The second thing that is going to weigh on the economy is right down here. Omicron casts shadow over winter holidays. I'm in New York. I'm a New Yorker. And if you didn't know, many of the shows in New York, and this is a reason that people come to New York, or one of the major reasons, the shows, and particularly the Christmas show, many of these shows have been canceled. For instance, the Rockettes Radio City Christmas Spectacular at Radio City is canceled for the rest of the season. They started out by canceling just a few episodes, a few performances. There were 4 scheduled each day, and they ended up canceling the whole thing. A third of the Broadway shows have also been canceled. And today is December 20th. It's the biggest week of the year for New York holiday visitors, and I'm sure that's going to fall off significantly. Let's move along to the market. Now, I have 3 trades that I teach in my course, because you really don't need to know more than these 3 trades. The market goes up, the market goes down, but the market does have repeating patterns that, if we can recognize them and we can see how typically successful they've been, we can look to them to play. The first trade, of course, is the gap trade. And I've been talking about this extensively. And the reason I talk about it so extensively is that the gap closes 75% of the time. So a trade that closes 75% of the time, you've got to keep your eye on. You've got to become a student of this, as I've become. Now, on Friday, this is the Friday chart, and I have my close of the previous day, of Thursday, and here's my trading zone that I determined using Taylor's book method calculations plus a few others, and I determined the daily likely range of prices. So the trading zone was up here on Friday, and our gap play was up here. Now, the market opened here at about 46.29, 46.30, and look at this fake out move. The market moved down to 45.80, 45.87 with significant moves on this 3-minute candle, significant moves down before it caught the bottom and then boom, moved back up, closed the gap. Who would believe that it would close the gap? Difficult gap to play because the market did show its face as a big fake out. At any rate, with the overnight news being negative, market skittled down here, and let's see, we've bottomed out at 45.27. But I put the trading zone up for today, for Monday, and here it is. Our support And these are calculated numbers. So basically, these calculated numbers are determined by the daily ranges of the previous several days. And I'm not going to go into the calculations. I do that in my course if you want to know. And I also send these numbers to my students each day so they can lay out their charts with these trading ranges. The support is down here at 45.83 and resistance at 46.57. Significantly, the gap, the window, the close of Friday is 46.07. So now the market came up from the overnight session. Look, it's gone down. I'm going to compress this chart. Compress this chart for you so you can see what's going on. Here's the close of Friday right here. The market closed down here. And since Friday, as it opened, it's traded all the way down based on, I'm sure, Joe Manchin saying that he is not going to support the Build Back Better plan, with the consequence that Goldman Sachs, among others, has reduced their economic growth forecast. But the market does look like it can make a play for closing this gap up here at 46.07. So I want you to watch that. Beyond that, the news is not particularly good. So that's just my opinion. Again, I always say don't put stock in the morning news, because it's not a gauge that you can use in determining where the market is going to trade for the day. Anyway, this is Marv Eisen, Timeless Dollar. I'm sorry I've been a little wordy this morning. I'm looking forward to seeing Ralphie with his Red Ryder BB gun, and I'm going to look forward to that with a bag of popcorn. You have a great day. Trade safe. Thanks for watching, and I'll see you on my next video.